Good morning and welcome to the Leadership and Insurance Program podcast. Even I've done that wrong. I'm going to start again. Good morning and welcome to the Leadership and Insurance Podcast. I'm your host, Alex Bonds, and I'm very lucky today to be joined by Alex, who is CEO of Boost Insurance. Good morning, Alex. How are you?
I'm great. Thanks for having me.
Good. Well, I hear you've got a very busy and full-packed house. You've brought all the remote workers in, but before we dive into that, because I've got a question about that, is perhaps you'd be kind enough to introduce the Boost Insurance business and what it is that you guys do.
Sure. Yeah. So Boost provides what we call infrastructure as a service for any company that wants to offer digital insurance products to their end users. So what that really means is that we work with a lot of insurtech startups or embedded channel partners that are interested in a more technology-enabled, insurance partner to sit behind them. They integrate with our API to access our policy administration system and our insurance products. We provide all of the paper, the capacity, the claims, and operational infrastructure that one needs to get to market in the insurance industry. So we were founded about 5 years ago now today, while I was still sitting in my old seat as a venture capital investor, doing nothing but investing in fintech and insurtech companies for the better part of the decade before this. So I'm excited to be, an operator of my own right now, and really working really closely with other insurtech entrepreneurs every day.
Yeah. No, awesome. I've got to ask you, and this is, I kind of I've sent you some questions which this comes up later, but the first question in, I'm already jumping away with the schedule. I just got to ask you, like, you're sitting there in venture, you invest in fintech, more generally. I know that you had some exposure to some investments in insurtech prior, because you invested in Snapsheet, weren't you?
Yeah, I was. Yeah. We led their Series C back in 2017, I think.
Yeah, and but sort of why insurtech? There's so many opportunities in the broad fintech space.
Yeah.
Why was it this one that drew you in?
Yeah, nobody ends up in insurance on purpose, right? That's the line here, myself included. So I started as a VC at a firm here in New York called IA Capital Group, which is quietly one of the oldest, really financial services focused venture capital firms out there. And then I started late 2008, early 2009, which was obviously a really good time to be getting started in, fintech focused VC, right? So on the heels of the financial crisis, you had about a lot of really smart entrepreneurs really disrupting the banking space for the first time in a long time. So I kind of fell into it. I didn't really seek fintech out or seek venture capital out all that much, but I got really lucky and I fell into the right place at the right time and fell in love with it. Really, honestly, it was really exciting and fantastic industry to be getting started in. So by nature of that, I was doing a lot of work in payments, especially finance and lending. So some of these peer-to-peer marketplace lenders, really like neo-banking before that was really kind of a buzzword or a hashtag, right?
Sure.
But really the DNA of the firm that I worked for was always insurance. It was just by nature of where the partners that started the firm that I worked for, came from. They're all private equity investors, bankers, and operators from the insurance industry prior to founding IA Capital. So I'd be doing all this like fun fintech stuff early on in my career, and I'd get tapped on my shoulder by one of the partners, and they had found this private placement life insurance company in Bermuda, or we were starting a brick and mortar homeowners insurance carrier down in Texas. So I would say, wow, that sounds really boring, and I was right. But when you're the junior guy at a venture investment firm, you have to help the partners out with the deal. So we would do these like traditional insurance related investments kind of as sidecars outside of our core fintech funds, and I kind of got forced to learn the industry kind of kicking and screaming. And then when you fast forward to around 2015 or so, that's when we saw the first signs of insurtech coming to the surface, and we thought we were uniquely positioned as a venture capital firm who knew the fundamentals of insurance, really kind of knew where the bodies were buried, to deploy earlier stage capital in that sector. So in the irony of all ironies, I was tagged to lead the early stage insurtech practice at IA. So this segment that I kept trying to run away from, I kept just getting pulled right back in. And that's when I got started really to appreciate the applications that technology can have in the space, much like it did previously in other sectors of fintech. So that's really kind of like how I got started in insurtech. And again, I was excited because there were, again, smart entrepreneurs coming from both within the insurance industry and outside the insurance industry that were really trying to disrupt the sector in a major way. So it was just a lot of the common themes. It was just a different sector.
No, I totally understand that. Yeah, so funny. There's so many smart, brilliant people working in insurance that I think still slightly hate the fact that they work in the sector, but they enjoy it. That's the thing. It's a nice community. It's got good people in it, and there's a lot happening right now. So if it was boring, it certainly isn't now. And before anyone shoots me, I'm not calling it boring. I'm just saying it can be.
It definitely can be. Let's be honest.
And so can any job. I'm sure.
Yeah.
I wanted to talk to you about embedded insurance. It's been a theme. I'm getting very close to calling this the Embedded Insurance podcast because we discuss it so much. But you offer both kind of this and the kind of the opportunity for your customers to operate with their insurance as their core product.
Yep.
I wanted to know, because you offer kind of like both sides of it, you might have a unique take on the sort of demand and need, but where have you had your most success with Boost Insurance? Is it in the embedded space, or is it in people who are operating insurance as their core offering?
Yeah, embedded is so hot right now. It's like Zoolander, right? I mean, it's just everywhere. You can't escape the buzzword. But honestly, I don't even consider Boost to really just be an embedded insurance platform, right? We are infrastructure as a service, like you said. We focus on both companies that are focused on insurance as their core business, and others from adjacent industries that want to build a meaningful vertical in the space, right? So what we built, the go-to-market for Boost back in like 2017 and even before that, with the business planning, was always to address that early stage or pre-launch insurtech startup first, because that is who is really suffering from these enormous barriers to entry in our industry, right? It's like they were the ones that are actively trying to get into the market and struggling to do so. We saw it time and time again with even just like very basic kind of distribution models with insurtech startups, right? It was just they're really struggling to get to market. So we wanted to really address that market first, but we already knew that this embedded finance thing was going to catch up to insurance already. And we had seen it previously in other investments that we made in fintech. So for example, we led the Series C in a company called Marquetta back in like 2015. And really that was one of the core inspirations for Boost, where they were enabling companies to issue payment cards to their end users and white label them and really just do so in a far more efficient way. They opened up their APIs, they built a core processor and put together all that kind of compliance infrastructure that you need to be able to issue debit or credit cards to your users, right? So when we invested in that company, we noticed that something that was not surprising but was still exciting was that all the fintechs were plugging in to use Marquetta as their core processor, right? That just made sense. Like obviously any fintech would want to work with the most technology-enabled processor behind them, right? But what we found really interesting and very surprising and very exciting was that companies from completely outside of fintech were plugging into Marquetta to do the exact same things. These were companies like Instacart, DoorDash, Uber, even that were plugging to issue cards. So they were configuring financial products and then issuing them alongside a core offering, a core product that had nothing to do with financial services, right? So that really ended up becoming like embedded finance or embedded fintech, way before that was even a buzzword or a hashtag, right? So that we knew that trend was eventually going to catch up. We see that insurance is typically like 5, sometimes even 10 years behind other segments of financial services in terms of adopting innovation and technology, right? So when we built Boost, we knew that insurtech startups were the right way to address the market first, and build a platform with fellow entrepreneurs, fellow innovators, that really wanted to push the envelope in the industry, move fast, break stuff, and do things new and different, right? And then we also know that segment was going to be pretty demanding, right? These are companies that are building a core business. They know what they're doing. They're going to demand that our platform perform at their level, right? So whatever we built for that insurtech segment was going to be more than enough for the embedded channel when that market was ready, right? And again, when you look at it, now it's like a few years later, and again, you're seeing that trend prove out, right? Where embedded finance is catching up to insurance, and you're seeing this huge boom in embedded insurance. But what I'll say is that market is still very nascent, in my opinion, right? It is something that still has a whole lot of room to grow, and we're just in like the first early innings, of the embedded finance, revolution. So I would say to date, we have had more success in the insurtech sector because that's what we addressed first. And those programs and partners have had much more time to mature on our platform. But in the last 18 months alone, we've seen this huge uptick in demand from the embedded channel. They're actually finding Boost, to plug in and identifying the opportunity themselves. So in addition to us investing more in sales and marketing and doing things like that, we're seeing a whole lot of inbound, inquiries, from embedded channel partners, both large and small.
Yeah. Brilliant. Thank you for that. Yeah, I think embedded is just such an interesting space because really the limitations are almost like your creativity about where you can put that. Because we had a Penny on an embedded solution from Europe, and one of their most successful things was not. I thought it was always at the point of sale. That was in my mindset. I was kind of like limiting myself, and he's like, no, there was an article about a car, and then it was kind of, there was an embedded offering via that, and they'd and that had been successful. So yeah, it seems like there's a lot of road to run there, but it's a really good point, making it fit for purpose for these kind of experienced operators that know what they're doing, and they're coming to you essentially for that infrastructure as a service, as you define it. If it's bulletproof for them, then it's gonna be fit for purpose for people that it's a non-core offering. But that's why I was so interested, because you've got sort of a unique insight, because you're playing, you can operate on both sides of the coin, whereas most people are coming with embedded. We're having these conversations and I'm saying, what do you think about embedded? And it's a moot point. I mean, they're not gonna shoot it down and say it's limited because they don't offer anything else. Right. So it's great to get both sides of that opinion.
Yeah, I think it's limitless, to be honest with you. I mean, one of those things where you have that kind of like age-old debate of like, is the broker going extinct? No, it's not. And I think like, brokers and agents will always exist in this industry, especially in like the more complex lines of business, like complex commercial lines, even some of the homeowners insurance policies or life insurance policies. I mean, they want to talk to humans and understand it. No one's going to be able to like create the perfect user experience that it's just going to make insurance all of a sudden simple overnight, right? So my theory is basically like, yeah, insurance brokers and agents are always going to exist. They might just work at different companies, right? They might work at Uber, they might work at Airbnb, they might work at just in-house insurance agencies within these companies, right? So it doesn't have to be these big brokers that are with kind of TV commercial brand insurance companies, right? So that's really my thesis on this, where embedded can be applied in a lot of different verticals and a lot of different industries, and that doesn't mean that brokers and agents are just going to go extinct. They might just go work at those embedded companies instead.
Yeah, exactly. It's distributing insurance as an industry in an embedded way, and not in the limitations of just where you can buy it, but where those people work. Makes perfect sense to me. I want to talk about some of you've got some core insurance products, management liability, renters, etc. And then you've also got this is off your website, create your own. I wanted to kind of understand what the limitations are on your capacity. Is it very broad? Could we be really creative? And then as a follow-up, have you been asked to create anything unusual or particularly innovative that you've seen?
Oh my God, I'm gonna have to bite my tongue on some of those things. Okay. So first of all, you're describing when we talk about build your own, internally, we have two different approaches to program development. Really, it's one is bottoms up and the other is top down. So bottoms up is build your own, right? So that's when we get inquiries all the time, like constantly, from insurtech founders and other companies from the embedded channel that want to do something in the insurance space, right? And sometimes they're straight down the middle. It's just like, I just want to do renter's insurance or pet insurance or something. And other times it is a little, off the beaten path, right? But Boost was built on, like, one of the core pillars of Boost ethos here is basically product innovation, right? So we want to welcome all ideas, and we'll never just dismiss them outright. We'll spend the time to really at least see if it's possible. And we've done that a number of times now at this point, where we've launched products in the market very quickly, number one, but also that have never existed before, in the industry. And it's one of those things we want to be a platform for innovation for other companies as well. And that really requires, first and foremost, having capital providers behind you that are willing to be first in a market that does not like to be first, right? So our reinsurance partners that we work with, our fronting carrier partners, they're incredibly supportive and give Boost a lot of autonomy to be able to do things that are new and different and test them in the marketplace first. So the bottoms up approach is basically, we get pitched on a concept. If we believe in the opportunity, then we will do the work in-house to really help them get to market with their product. So one recent example of that is actually a crypto wallet insurance product that we just launched about a month ago. So That is the first ever direct consumer crypto wallet insurance product for the retail crypto investor. So this is not institutional grade. It's not cold wallet storage. This is like real hot wallet storage, hot wallet crypto insurance for the everyday investor, right? That took us the better part of like a year and a half, maybe even 2 years, to really build from an insurance product perspective and get it live in the marketplace. About a month ago. We did that in collaboration with a crypto-focused insurtech startup that really wanted to get to market with a similar type of product. So we just collaborated with a subject matter expert. We have our own subject matter experts internally here, and we built that product, from scratch, soup to nuts, and got it to market about a month ago. So wow. That's a weird one. That's a weird one, but we really think it's not all that weird. It's just a new asset class. People need insurance against risk, right? We have others that we have not supported. We don't support everything that comes in our door, but maybe I'll let those remain nameless for now.
Yeah, we don't want to shame the bad ideas out there.
Yeah,
that's really interesting, and not wanting to make this a crypto podcast, but there's plenty of them. It's really interesting, the idea of crypto wallet insurance. Just because I'm thinking more about not the consumers, but the investors in, or the early adopters of crypto and their approach to risk. So I'm really intrigued as to how that will take off, because you've got kind of people that are probably very comfortable with a really large variance of risk. But then with anything that becomes kind of more valuable, your approach to risk sort of tends to mature, and you can assure it.
So this is another thing that you'd be really surprised. The crypto world, right, is extremely, extremely smart. These are not like fly-by-night people that just like throw money at nothing, right? I mean, they're well educated. They're very smart. They're very technical. And the risk that we're insuring on that product is not the fluctuation in price, right? No. It is we're insuring against the risk of theft, which means that it's got like almost like a cyber risk peril attached to it that you're insuring against, and that's something that is definitely top of mind in the crypto world, right? They have an extremely high risk appetite when it comes to the fluctuations in the value of whatever the crypto is that they're investing in, but they're intimately aware of the fact that one of those exchanges, one of those custodians, could get hacked one day, and no fault of their own, their coin could just disappear one day. So that is something that's top of mind, and we're seeing a lot of early engagement with that product from the crypto world.
It must be really hard to price, I would imagine. That's quite
difficult.
Quite, as with anything related to anything sort of crypto, cyber, put it in that sort of cyber perils. It's such an evolving marketplace. But then that sort of leads itself into offerings like yours. Dynamic platforms where you can make changes quickly, in the same way that traditional carriers have often been said to not be able to do. You can have more dynamic pricing, one would assume.
Yeah, absolutely.
Yeah. We touched on team there. I kind of wanted to know what the team was like. What's the makeup of the team? You obviously, is it? I think you mentioned is it nearly 5 years the business has been sort of in existence? Yep. So talk to me about the founding team. How did you come together? And then I kind of want to talk about how that's grown, because you've gone through this really unusual period in the last couple of years that everyone's gone through. But I think, particularly sort of earlier stage businesses growing and then trying to work with external partners, enterprise technology, there's so much going on there that you sort of require those relationships to be built when they've been built over that period of time. But how did the founding team get together? Did you all know each other from the off? Were you all kind of friends, colleagues from the past?
Yeah, so the team currently today is an amazing mix of both insurance, tech, and kind of startup and growth focused individuals, and they're all deeply experienced folks from all sides of the world, right? And we're basically militant in terms of making sure that everybody is super collaborative, working together, and it takes a lot of work, right? I mean, honestly, you have to really invest and focus on it to ensure that culture stays the same as you grow, because you're taking people from not only different industries. Honestly, sometimes they're almost like different species, right? If you spent your entire career working at like large bureaucratic insurance companies, coming into a startup right out of the gate is a big adjustment, right? But I think we've done a really good job with that. I mean, we have all of our teams are working in sprints like engineers do, including our insurance team. It's pretty fantastic to watch. So you have a team of underwriters, actuaries, coverage attorneys, and things like that that are working in lockstep with like engineers, developers, product people. It's pretty awesome to watch. So that's part of the reason why in the early days, again, kind of knowing where the bodies were buried in this industry, I wanted to make sure that we didn't sacrifice on any of those kind of core pillars that we needed to get to market and run a sound insurance operation, right? So when I closed the seed round of financing back in like 2017, it was still just me in a PowerPoint presentation at that point. So I had to go build for about a year and a half, and the first and most important thing to build was that early team, right? So step one was finding a CTO. I don't know how to code. There's no chance I'll be able to build any of this stuff, and I wanted to make sure that we were building it in-house first. So I hired a CTO by the name of Chris Mattoni, who comes from the insurtech world. Actually, he experienced that problem firsthand that we were trying to solve for from an insurtech perspective, where he was forced to integrate with 15 different insurance carrier systems as an insurtech for about 5 years before he joined Boost. So he was going to build a platform inside out to make sure that no developer, no engineer ever had to experience that problem from the get-go, right? But then the other thing that we knew was critically important that to build alongside the technology was the insurance infrastructure, right? We wanted to make sure that we had the pen and that we could actually create insurance products ourselves and not just take the system that we've built and integrate it with, Nationwide or Allstate or State Farm, right? It was like we needed to be able to make these innovative products ourselves and do so very efficiently. However, when we went to market, we started pitching the reinsurance market right out of the gate, and it was me asking a bunch of reinsurers to basically have a blank check on their balance sheet, and they were like, "No, thank you, sir. Like you don't even know how to spell underwriting, right?" So I was like, "That's fair." So the next key employee that we hired was our first chief insurance officer, a woman by the name of Julie Galante, who was previously the field underwriting officer at a company called Pure Insurance. So honestly, you need both, right? You need to have the grown-ups in the room on the technology side and the grown-ups in the room on the insurance and underwriting side if you really want to build a true sustainable business in this industry. So that's really, we built off that core. I came from the startup and VC world. Chris came from the technology world and was deeply experienced there, and Julie came from the insurance industry, was deeply experienced in the underwriting space. So with those three pillars, we went to market that way.
With my recruitment hat on, how did you find those people from a practical sense? Were they referred to you by people you knew? Do you use recruitment companies, or how did you come into sort of meeting with those guys?
With that, that was purely organic. So that was basically going out there, recruiting, plugging into your network, and seeing what was out there. Right. It took a very, very long time to make both of those initial hires, and we still take a very long time to hire across the entire company. To be honest with you, we really hire slow, and there's a couple of reasons for that. One, we're really, really selective in who joins the team, and then two, because of what we do, the top of our funnel is always kind of super narrow, and I think you'll appreciate this as a recruiter. We work with a lot of recruiters now because we can't possibly hire at the rate internally that we need to, but the top of the funnel is still very, very narrow all the time, because you have, on the engineering side, for example, you're fighting against the stigma of having insurance in your name, right? It's not like the sexiest industry in the world, obviously. So engineers that are choosing between Amazon or Tesla and Boost Insurance, obviously you're fighting an uphill battle right out of the gate on that, right? But once they get in the funnel, we convert at a pretty high rate, because you're only attracting engineers that want to solve big problems, and then on the insurance side, you're only attracting insurance professionals that want to challenge the status quo, right? So the top of our funnel is always fairly narrow, but it converts at a pretty high clip once you get them in there.
Yeah, interesting. Yeah, and that's quite refreshing to hear, actually. I think not enough people, and do you think your tolerance of having a slower but more efficient recruitment model, do you think that comes from your investing background and watching it happen? Because one of the things that I tend to find is that people think it's going to be a quick process, and we'd all love it to be, and sometimes it is. Sometimes recruitment's very fast, it's brilliant, but actually, if you really want to build a culture and you want to build the right team, you either have to constantly be recruiting, and I think you should be doing that, constantly reaching out, building new networks, but also it takes a long time because you've got to run a process. So do you think that's some of your investing background has helped there?
Yeah, a little bit, I would say, because you kind of know some cautionary tales, and they're always on your mind, right? I even see it's happening all around us in insurtech right now, and in fintech. Let's not even like pretend that elephant's not in the room, right? There are companies that are at our stage that have like 100, 200, 400 employees. I mean, that to me is insane, and would also make sure that I go from having like 2 hours of sleep a night to 0, because it would terrify me, to be honest with you. Yeah. It was one of those things where when you start, you go from the investor side to the operator side, and most importantly, you go from being an employee to an employer. You better respect the fact that the people you're hiring are human beings, and that if you're just going to grow at all costs, it's going to catch up to you eventually, and then you have to scale back. And I like refuse to put our company in a position where we're looking down the barrel of layoffs and things like that. So it's been there were a lot of reasons. One, don't waste money, and don't just hire for the sake of hiring. You hire either right ahead of growth or right behind growth. And then two, make sure that you're maintaining some empathy for the folks that work for you, so you never find yourself in a position where you're scaling back instead of scaling up.
No, it's sage advice, and we've certainly seen some pretty dramatic, particularly in the US, scaling downs that have not been handled very well. So no one wants to be put in that position. So it frightens me how much I see people grow, and there seems to be no infrastructure is the other thing, like to on how to grow and how to handle people. And we talk a lot about investors and being careful with investors' money, and one of the things that I always say to some of my clients is that you're asking people to invest their most precious resource, which is their time in you. So why you would treat them any differently to how you treat the external investors, and by that I mean just like honesty and transparency with like the runway and identifying where the gaps are in what you've got internally and saying what you're going to do about them is stuff that you would expect to tell your kind of investment board or whatever, but people kind of are slightly less forthcoming with it with their teams. So I'm a big believer in kind of taking that approach. So really interesting to hear that. You seem to have got sort of culture right. We mentioned off air that you've got all the team. Is it all the team in the office at the moment? And some people have been remote.
No, we're kind of all over the place now. In this day and age, you have to be, and I'm kind of happy about it. I would say pre-pandemic, I was definitely on the more extreme end of the be in the office spectrum, which is a little archaic of me as an innovator. But everyone kind of got forced into this, right? And I've embraced it. I think productivity ticked up during the pandemic, like across the board, I would say. The only thing I found pretty exhausting about it was that it's so hard to maintain company culture when you are remote. So we do like to make sure that folks are in the office at least periodically throughout the year, so that everyone has the opportunity to bond in person and not do it via virtual happy hour all the time. So I still think that's critically important. I would say the majority of our team is at least locally based in the New York City area, but we do have remote employees all over the place now.
I'm seeing a lot more of that. You kind of need to offer remote because, again, if you're going to have the best talent, if you're saying we've got the best engineers, well, all the best engineers will not just happen to be in the New York area, and they will not necessarily want to go and live there, particularly on the engineering side. But I do think a lot more hybrid models now, because I also think people want to be in the office, but they want to decide when that might be and how frequently that might be. So I'm with you. I was a bit more archaic.
I agree with you. I think we're not like actively looking for New York employees, like specifically. No. It's one of those things where just like I think it just happens because people want that optionality, right? Like,
I think they do.
Want to be able to go to an office if they want to, even if they're not, forced to. You know what I mean?
Yeah, I was talking to someone earlier today. There's so many reasons. You've got younger people who live in like shared accommodation and they haven't really got the setup. You've got people that have got children that just need a break from being in an environment with loads of kids, and you got just a sense of camaraderie as well. So there's so many reasons, and that's just three off the top of my head. But I think offering hybrid is clearly the right way. I wanted to ask you about your partners. So obviously the business it's important to have the right partners in your business, particularly. You've got some very large partners. What do you think it is specifically about your solution that has attracted such like marquee names to your offering?
Yeah, on which side of the marketplace? Because you have on the back end, we have global reinsurance companies, fronting carriers, and things of that nature. And on the front, we have distribution partners. So
yeah, of course.
I can address both. I think on the back end, with our reinsurance partners, we work with a number of them now, but really a couple of core groups. Renaissance Re is a fantastic partner of ours at this point. Nephila was an early investor in the business as well. Those are just risk capital providers that are very forward thinking, which is a lot harder to find in this industry than you would think, right? I think the value proposition we offer them is the fact that we're giving them, almost like arm's length access to innovation that's happening, across their industry, right? They can focus on they have bigger fish to fry, right? These are companies that are huge, massive balance sheets. They need to be doing, spending all of their time on that core business of theirs, though. But they're not in denial of the fact that there is innovation and disruption happening in front of them. But that's not their core business, right? So we're almost like, call it like outsourced innovation for them, right? Where we can handle them, we can manage them. We have professionals that they trust and respect to oversee the programs and make sure that they're compliant and being underwritten appropriately. So we're basically almost like an aggregator and a curator of innovation that's happening in front of us, right? And it gives them that arm's length access, that they need. So that's really, I think, what they appreciate and what attracts them to our platform, which is fantastic. And we're always adding, more reinsurance partners every day. So to the extent that others want to plug in, they can plug in alongside this amazing core group that's forming behind us, right? And then on the front end with distribution, again, we address that kind of like pre-launch, early stage insurtech startup first, and we wanted to like move up that insurtech value chain as quickly as possible. So we gradually moved it from like pre-launch and early stage insurtech clients to growth stage to really like enterprise level customers that have already done this themselves, right? I mean, we had this constant question of like, when do people graduate off the Boost platform once they've like kind of matured and proven their concept out? And my response is always like, why would you do that? Like we've already done this for you, right? We're already managing like the guts and a back end operation. It's like all the picks and shovels that nobody actually wants to be managing themselves anyway. And further, we've delegated full MGA authority to our partners. They have a huge input in how we modify our products over time, pricing and underwriting and things of that nature. And we just let them operate. We don't interfere with their day-to-day operation at all. So my response to that has always been like, why would you ever like move off of AWS and build your own server farm just because your company and your business got bigger, right? You would still stay in the cloud and just plug into AWS as opposed to doing that yourself anyway. So we had to prove that over time. And I think really it's like, now the kind of enterprise level customers that are plugging into us, especially the ones that have been in the industry for a long time, they just know better that it's not fun to build this yourself. And if this option existed when they went to market, hey, maybe they would have used us from the start. So they're plugging into us to actually launch new lines of business alongside whatever they already built themselves, because they know that this is just a much more efficient and cost-effective way to do it.
Yeah, that scalability is super interesting. I can see why that leads into kind of the different scales and size of business partners that you've got. I wanted to sort of switch gears slightly and ask you about your investment background. Yeah, I mean, you don't have to answer this, but I'm hoping you will. I just wanted to get your take on the valuations we've seen in the insurtech space, because we've seen, some pretty dramatic falls in the largest insurtech stocks that are out there. And my question is really twofold. Like, do you think this like represents a correction? Have we seen some overvaluation? And what does this? And then the second part of that was to ask you what you thought this meant of sort of traditional insurance carriers. Are they undervalued businesses potentially?
Yeah, I think Boost is incredibly undervalued, and we are
a fair response. A fair response.
I had to. There you go. But look, I'll be honest. I can't deny the fact that things got a little crazy in all across all fintech, and honestly, tech more broadly, right? I think in TMT in general has just gotten hammered in the public markets across the board. So it's not just insurtech. Insurtech is, objectively one of the poorer performers of all of fintech, but it's across the board. I think this is just a general market correction in addition to insurtech, people getting smarter on insurtech, right? So you see some of the earlier movers, none of which I'll name, but everyone kind of knows who they are, where you can't burn the candle at both ends forever, right? You got to start, becoming more efficient as a business and respecting the things that create sustainable companies in this industry, such as underwriting, right? So you can't have both high CAC and high losses, right? You have to optimize on something over time. And I think honestly, some of the early movers in the insurtech industries took too long to do that, right? So the street is not going to put up with that, and they're going to identify that really quickly. And then all of a sudden, you're going to find yourself being valued like a traditional insurance company, and that's not good, right? You have to optimize on both. If you had high losses still, but really low CAC, maybe you can make that kind of efficiency play still in the public markets, right? But you can't have both. And most of the kind of more prominent, brands that are in the public markets now have both still. So I think there is a justifiable correction that's taking place. And again, I'll spin this again back to Boost and our own experience here. Is basically we always knew that our B2B model was going to be a little bit more efficient on the customer acquisition side, right? That's the brand in front of us. That's what they do for a living. They're always going to do it far better than we do. So that part we were never worried about. But the underwriting is key in this industry, right? You can get away with hemorrhaging losses for the first few years as a startup with a risk capacity provider that has already kind of probably like taking that risk into account before partnering with you in the first place, right?
Yeah.
But you got to start trending down. You got to start seeing your book of business age the way that it's supposed to in the industry, or they're going to cut the nozzle off, right? So we actually took a really slow and deliberate path to market to make sure that we were prioritizing underwriting above all else. And we terminated programs and partners that weren't respecting the underwrite, weren't respecting the compliance, because we knew that us being a platform with capital providers that sit behind our marketplace, we needed to make sure that we're building a sustainable business. So I think what you're seeing is D2C companies that are not optimizing on customer acquisition, in addition to not performing well in the underwriting. It's the worst of all worlds. So that correction, I feel like, is justified. But I think the cream will rise to the top on the industry as a whole. And those companies that are respecting the underwrite and are truly optimizing on customer acquisition will pay off in a big way for sure.
Yeah, no, thank you. That's a really fair response, I think, as well on the state of the market, because I think anyone that knew about anything about insurance was sat there in kind of slight horror with it all. And the other thing that to be clear and fair to those companies, and again, not naming names like yourself, is that once it's in the public market, they don't set the valuations of those companies. People are buying and trading them at their leisure, and so sometimes it's a bit unfair. It's not like they've done anything unscrupulous, but it was just kind of sitting there looking at things from a kind of fundamentals perspective. Insurance isn't Amazon. You can't just scale and I went from buying one thing a year on Amazon to probably buying one thing a month, and including my partner, probably one thing every about 3 hours, I think. It's the saying that lost. There's only one insurance policy I'm going to buy on my house. Once you've sold it to me, I'm unless you're going to sell me alternative products, and even then it's not going to be so much. So I think the term insurtech itself, I've always found a bit damaging and slightly misleading, because you can include these big neo insurers in insurtech, but they're still insurance companies. Yeah. They're not. They might have created their own tech to do it. They may be tech first. They may be digitally native, but they are still a fundamental insurance carrier, and therefore the fundamentals of insurance, being an insurance company, apply. Yeah. I think where it's different and interesting and exciting is the SaaS-driven stuff, and whether that's a combination like yourself, where you've got some capacity to offer, and then you're offering enterprise as a service. That stuff is, yes, it's going to make it more efficient, and the smart money can go on creating really unique insurance products that can be offered at scale quickly, where you can make some really, really good money. So I think we're starting to see a more mature, not just industry within insurtech, but also we're seeing more mature businesses that know the fundamentals and they're operating within those. Whereas I think some of that early investment was just almost, I'm not going to be arrogant enough to say sort of blasé, but to a certain extent kind of almost didn't get the fundamentals that were required to kind of drive a successful insurance play, and they thought they didn't apply, but clearly they do. So but no, thanks for, I really appreciate you giving your input that, and sort of following that on. So you've been in the insurtech space, I was going to say 5 years, but that's not fair, because you're in the insurtech space before as an investor. definitely makes you a veteran. That's 100%. I mean that in the politest possible term, Alex. But is there anything outside of Boost that you've been really interested in? There's any either technology companies or businesses that you think are doing really interesting work right now?
Yeah, I think you hit on a couple of them right there. And a lot of it has to do with the embedded thesis. So that again can mean a lot of different things, right? This doesn't just have to be that company from completely outside the insurance industry. I think in order for insurtechs or really anybody that wants to be in a business of insurance to kind of maintain, you have to retain your customers, right? And I think there's a lot of opportunity to like add adjacent products or services, either whether you're an insurtech startup or an embedded channel that already has one, right? So it goes both ways, in my opinion. So I'll give you an example of something I'm just finding so fascinating and exciting that's going on in the market, and a little biased because some of it has to do with what's going on at Boost. But what's happening in the cyber insurance market right now is extremely exciting. It's absolutely terrifying every risk capital provider in the world right now, but I find it to be extremely exciting. So you have companies that are sitting out there that are leading with security screening and monitoring tools and real like deep cybersecurity technology in front of the insurance product and risk, right? I think that's a perfect use case for embedded, and you're seeing it across different channels, right? So you have embedded channel partners, which are basically just cybersecurity software and security companies, right? They want to offer the insurance in the first place, but then you have a lot of insurtechs out there. One of our partners in particular, we see a lot of them, but one of our partners in particular is Cowbell Cyber, who I think you've spoken to in the past. What they're doing in front of us on the small business cybersecurity monitoring and protection side of things is really what's differentiating them in the marketplace right now and protecting the book of business that we manage together, with them, right? So I think that is one thing that I just find to be super fascinating, very topical, considering what's happening in Ukraine right now, the increased risk of cybersecurity and hacks. But that's just one specific trend that I'm really excited about right now.
Yeah, no, I likewise. I'm finding that space fascinating to the point where I'm having to read up because I thought it was enough to know insurance and insurtech, but when you get into that world, you're like, well, that's where insurance gets interesting. Like, where does it stop and start? And I think the approach some of particularly the cyber firms are making, where it's there's a response as the risk carrier as well. So there's a proactive response, whether it be kind of cyber teams come and help your small business and alongside the coverage. And then we're seeing that model adopted by other businesses. So Counterpart Insurance do management liability, and they're almost taking the same ethos. It's that sort of proactive, helping you as a business prepare for the risk that we're insuring you for. So it's management liability, their space, and cyber, we've seen it a lot. And those kind of more proactive models, I think, are really, really interesting in the space. We haven't had Cowbell on actually, Alex, so you can give them a nudge if you know them well, but we are in talks. So I'm hoping to get them on soon because I think it's a fascinating business. But look, Alex, I won't overstay our welcome because the listeners won't allow it. But thank you so much for being a guest. I really enjoyed that. Look, if people want to reach out to you, where's the best way to contact you? Are you pretty active on LinkedIn? Is that a good way?
Yeah, LinkedIn's probably your best bet, even though I'm very slow to respond. I'll try.
That's very honest of you to say so. But Alex, thanks once again. This has been really good fun. So appreciate being a guest.
Absolutely. Thanks so much for having me. It was a lot of fun.
Thanks, man. Bye.